Hi and welcome to the Market Alert for Friday, the 24th of June 2022. So stocks and bonds surge as recession fears tank rate hike odds. Equity investors shrug off Powell's unconditional inflation promise, saying that he was going to continue to raise rates. But then later on, he changed his mind and said that he only saw raising rates till the end of the year. US stocks bounced back from disappointing PMIs as yields and commodity prices declined. And then later on in the session that changed, bonds and gold bid as PMI send rate hike odds plunging. So there you go, there's the pivot from we're going to keep everything going, raising rates until we get inflation under control. But then the PMIs were bad and they're saying, well, hang on a minute, let's see what happens at the end of the year. Futures rebound as hopes of imminent recession spark. Bad news is good news reversal. And here you can see it in writing. Fed rate hikes to end this year, followed by 3% of rate cuts and QE. It's not a question of when or how much the Fed will cut rates in 2023, but how fast it will go back to zero. And that's something that I've said all along. They may be able to raise rates, but as soon as the economy goes to rats, they'll soon start switching, especially with the midterm elections coming up in October as well. And also from the UK yesterday, government forced to hand over 7.6 billion last month in record interest payments on public debt. So again, this started in 2014 when we hit £1 billion a week in interest payments. So good luck with all of this going forward, especially if we go back to zero in interest rates and start printing money. Eventually, it will all implode, as it always does. News today, we've got retail sales from the UK at 7 a.m. and then German info at 9. Bullard speaking at midday, and we've also got 3 p.m. revised consumer sentiment, but that's all. But the market's rather bullish at the moment. And finally, in the gold-silver ratio, you can see that we've had a retracement up to 76%, or 78%, there, and starting to move lower. More on that in just a moment. And kicking off with the stock markets, the Dow moving sharply higher yesterday, managing to hold above the 5-bar moving average despite having a look at it in the daily chart. As you can see already, we're at 89% of the recent move down back up, which we've had marked up from yesterday. Got this high to take out here, which ties in with 38% retracement drawn from here back to here as well. So a bit of work at this area here. So that's the 31,050 level is what I would actually use there. In the 30-minute chart yesterday, the market moving up very nicely, and you can see they're all going well until the Dow had an hour and a half listening to Powell and then made its way back, oversold demand. Down to the BRN there. What's the level there? Let's just have a look. It's not the 30,000, it's 30,300. It seems to have become the new support for the Dow. And then moving off this, we see prices continuing overnight as well, already surpassing yesterday's high for the Dow, which is why in the daily chart it's important to switch to the fibs here and the physical resistance price areas that we have here. And in the German DAX, also moving up, but nothing like the Dow. It's a lot weaker at the moment, simply by looking at the chart. We've actually retested the low of last week, which was the 16th of June, and that we went through the 12,968 and 12,943. But overnight prices have managed to come back, and the momentum is still showing towards the upside. These are the price targets on the upside. And also the 5-bar moving average ties in with the 13,140 level there as well. I tend to use shortcuts of these numbers in my own head, and then when I come to actually read them, I'm having to read them longhand, as it were. So yeah, 13,140 is the level that you want to watch as well. 50% retracement as well. In the 30-minute chart, Again, yesterday we saw the market move sharply lower on the French PMI. That kicked it off to the downside. We then had a retracement back, as you will see there, bang on 89% of retracement at the DP, and then the market closing back below the 50 EMA and making its way down, along with a bit of a pause there while Powell spoke, but sending the market all the way down to the S2 and also oversold. And through, like I say, those daily numbers there that you've got, those supports there at 943 and 968. So the market managing to come back from this on the overnight, which you can see there. And also, unlike the Dow, this is not above yesterday's high, which also has the 200 MA in place there as well. So you can transpose what you're seeing in the daily chart to the 30-minute chart, and you'll see the market's currently trading at 78% there. So keep an eye on that level, and also the 89 as well, to see if prices will actually get up to this area. If they break 89, then there's a good chance we've got the physical in between this and the R1, and then we've got the high plus another couple of areas of resistance there as well. In the 5-minute chart yesterday, well, the market just sailed south on the open. The futures market moved higher, but then just sat in a sideways range. Sorry, the pre-market, then the futures sat sideways, and the DAX opened and moved lower. I'm glad it's the weekend. I got to string two words together this morning. The DAX moved all the way down to the low of the previous day. That was Wednesday, and then found some support after being oversold for a period of time and failing to close above the 5-bar moving average. We see the crossover and the divergence. The market comes back to the 20-bar, has a pullback. You can see the pullback there is around 62, 78, which it is. And then once again, you get the demand and the crossover there, and the market then doing the same again, and then managing to have a lovely rally of 100 points mid-morning. And we had a situation here where the momentum dropped off. We saw prices move lower. They moved higher again. They went through the high to the left and then failed. And then another retracement there with the momentum moving lower. And then once we broke the 200 MA and the DP and close, and the 20-bar moving average as well, and the 5 turning red, parabolic red, the market moved back to the downside. Didn't do a lot while Powell was speaking. You can see there we had a move up, move back 89%, and then the market just trading sideways until the evening, when prices then broke to the downside with the Dow. Overnight, so prices have continued to move higher. We're currently above the DP, the 200 MA, the 50 and the 20 and the 5. The averages are all in the right order for the market to move to the long side and continue to those target prices that we've just looked at in the daily chart, this set of fibs here. There's no major economic news today either to affect the market. And in the S&P, very similar to the Dow, we had divergence, we were oversold, the market's moving back, we're more or less at the physical resistance here, where the market stopped before, 3840, and in that case we'll go to the next high down to here, and you'll see this is the upside targets for the S&P, and the 38 again more or less tying in with that 3840 level that we've just drawn in there, which you can see there. So that's the areas of resistance in the S&P. The 20-bar moving average tying in with 50, 62, just above. You will find the 50 EMA trapped in between the 78 as well, and 89, of course, where the market sold off before. You've got all that resistance there as well, hence the two physical resistance price levels there. In the 30-minute DAX, well, very similar to the Dow as well, moved down, went more or less to oversold, and you've got the overnight double bottom there. Market found some support, cluster of volume, and then started to move back above the DP and the close there. Big bar, but didn't quite manage to stay on the highs, but the next bar stayed above the BRN there. The averages started to spread. The market moved up. You can see that we've got resistance there at 78%, 78.89. Market comes back, does a double top during Powell's speech, and then comes back to the DP where it finds support and it's oversold with demand there as well, and then moved up in the evening session, and overnight continues to take out the previous day's high. In the FTSE, we've got the market reversing yesterday's down move. Let's just move this, and again, let's just put in some fibs here. Again, as weak as the not quite as weak as the DAX, but certainly weaker than the US markets. As you see, this retracement coming into play here, that's going to be a 78-89% retracement to the downside, which you see there, just fitting in nicely. Momentum's moving up. Just remove that now. Upside targets today, 5-bar moving average first, followed by the 50, because the 38 is at the 50 level. I've just managed to remove that. Then your 62 is this high, and then you'll see at the highs as well of the others, as these fibs areas will create some sort of resistance for the FTSE if it continues to move to the upside. But like the DAX, it hasn't taken out yesterday's high, so this has a bit of movement to the upside when the futures market opens at 7 a.m. Yesterday we saw the market sell off with those flash PMI numbers in Europe and the UK, but once again the market finding support at Wednesday's low. Very important areas, as is the high. You can see the buying coming into the market there. It became oversold. The market then retracing before it then made a double top before switching and moving lower after becoming overbought and then crossing over. And you can see the market trading all the way back down to the close of the previous day. Sorry, it's not the close, it's the S1, the green line that you can see there. Again, selling disappeared completely. We had a bit of selling coming down. We had some demand there putting the brakes on at this level, and then at the BRN psychological level of 7,000 here, very important level, which you see the market retrace 89% to as well. And then overnight the market's traded up to the 200 MA. You've got the R1 there, and like I said earlier, you've got the high, which is going to be an interesting area at the moment. From the high to the low and projected up, you can see 78% is going to tie in with the R1, and then 89 is just above, well, it's 100 points higher from where we've been on the overnight, from the 7,000, so it'll be 7,100 level there. And in the yen, a down day for the yen yesterday as the dollar had a bit of strength, and you can see there the market trading back to the 20-bar moving average. You can also see some physical support there, or some resistance there as well. So if prices are to make their way back to the upside, you'll want to see them take out all of these individual fib numbers there, particularly the 89 and then the physical one there. You could also use this high to this low, or to this low as well, and you'll see you've got 89. You've got a double resistance there as well, just a slightly above. So expect some resistance in this area should the market move to the upside. Yesterday, PMI numbers, obviously everything going south to begin with. Then we had a bounce back to the previous day's low, having sailed through it with a big bar. The market then seeing this as resistance, trading all the way down just below the S2, and then overnight prices stuck at yesterday's close, and also the 50 EMA giving the market some grief, along with the DP level as well there that the market is currently below. So it looks like it's still quite bearish. So if that's the case, watch the low from yesterday. Just draw some fibs in, and you'll see that the 89 level is just above yesterday's low. Meanwhile, in the pound, this moving back up yesterday, whether this is in response to the 7.6 billion that we had on the interest payment, I don't know. But the dollar certainly starting to show a bit of weakness overnight, which we'll see in just a moment. So the pound showing some demand there yesterday and moving lower at the moment. Watch the 89 and also this physical area here as well, where we saw the market pull back. But the pound should continue to move to the upside as long as the dollar remains on the bearish side, because there's going to be another rate increase for the pound coming shortly. So yesterday, PMIs again down to the S1 for this market. The low wasn't taken out, it was just sitting there underneath. Then we saw the market trade sideways for a couple of hours before it moved to the upside. Probably, like I say, with the release of that huge interest payment on the debt. And then the market making its way back as Powell spoke, and then overnight trying to head towards yesterday's low. And finally, yesterday, as I said, silver got monkey hammered to the downside, but overnight things are looking a bit different, which is I'm actually disappointed about. I was hoping that we were going to have another dollar taken off this, at least get down to that psychological level of $20. I know this is $20.50, but to have that shakeout. But the shakeout appears to have come overnight. We have a look at the 30-minute chart, unusual, but there you go. So they slammed the price down to 20.75 overnight, and it's been moving higher ever since, which is, like I say, I'm quite disappointed about this, because I was hoping we'd take another dollar off at least in a violent shakeout to buy. So I'm going to wait for a pullback during today's session, as no doubt we'll get one with the London fix. Yesterday the market moved up nicely with Powell. That's probably because he said that he's not going to do the rate increases after the end of the year, and they're going to go and look at reducing rates again and printing more money, which is going to be bullish for the silver market and the metals market. If we have to wait till January, we wait till January, but boy, when that dollar starts to tank after he starts printing again, then we're going to see some major problems with the US dollar. Gold also the same, but not as strong, and that's why when we looked at the gold silver ratio, we were at 76% retracement, and it was red. And when I saw that red this morning, I thought, well, what's the measurement back from the high to there? And it ties in with the 78, not 76. Like I say, I have a real problem with numbers this morning. Anyway, gold also finding support there at 62% retracement. And you can see overnight that gold hasn't reacted as well as silver at the moment, sitting on the low there from Thursday. Dollar looking a bit weak overnight, still closing through the 5-bar moving average. This gap is a pain in the proverbial. It's obviously prices have moved up. It's data missing by ETX. I don't know why they do this when they know the next contract's going to roll. But it doesn't really matter, because we can see there that we've got the dollar starting to move to the downside, just as we did after the last rate increase in the US, when prices moved lower and the silver market was allowed to move up. And finally, crude oil managed $112 a barrel yesterday, and then got hammered as well, but finding support at the 105 level at the moment, which you can see there. So still bullishness in the crude oil market. Okay, that's it for this one. There's a lot covered in this, but a lot going on. As I say, heading into the weekend, my brain could certainly do with a break. So that's it for this one. Look forward to seeing you on Monday. Have a great weekend, and as ever, thanks for watching. See you in the next.